and you will get. There we go. So today I am happy to introduce to you a community leader, a former youth pastor. Got that? So Reverend Waddy, she's
Mm,
in finance like you. So she was a
hmm.
pastor, you pastor. Now she's gone to finance. You were finance, gone to.
Yeah, well, we're looking for a youth pastor too now.
There you
You know
go.
that.
But
You know we're looking.
okay, that's good. You hear that, Tanisha? We're recruiting. We're gonna bring you from Texas to Virginia.
Hey,
Yeah, but she's followed her heart. She absolutely wants to help people and it has a desire to make sure that people are living well and what she learned, and I'm gonna let her tell it. You know, her mother was an entrepreneur or is an entrepreneur. So she's had great examples in her life. She's highly credentialed. You've seen it in the bio, but what she's going to do for us today is make sure that we are all set with our own financial plans and what it is that we think we need to do as young and older people. So, Tanisha, take it away if you can.
Thank you so much. I appreciate that introduction. I appreciate the time with you all today. I don't take for granted that you've given me this platform. So thank you so much. As Lisa stated, just telling you a little bit about myself. I am a financial planner with Edward Jones. I'm going to share my screen for a moment. So let me know when you can see it. I sent the request that I can share my screen.
There you go. There you
Thank
go.
you. So please let me know when you can see my screen.
It's coming. There you go.
All right. So as an advisor with Edward Jones, these are just some of the things I help clients with. And I really like to say pretty much if it has a dollar sign attached to it, I'm here to talk through it and come up with plans and ways to work through it. If I don't do it specifically, I connect with people, help clients with different things that touch their money because I'll say like if you get a bad roofer and you got to pay for your roof twice, that just took away from our retirement plan. So, but I got into this field because I have a passion for people. I care about people. As Lisa stated, I'm very involved in ministry. I used to be the teens pastor at my church. I'm still a servant leader at my church, so our pastor won't let me leave. But I do still do quite a bit there. But I have a background in therapy, and really, I always wanted to be a therapist because I wanted to help people have and enjoy life. I a lot of what I do is scripture based and scripture led, and so to me, when the scripture says Jesus came so we can have and enjoy life, that meant a lot to me. And how do we do that? We have today, we enjoy what we have, but also being good stewards to be able to have and enjoy in the future. And I just learned as I was helping people with therapy with their mental health, I realized how much I help people with their financial and with their mental health by working on things financially. Your finances touch so many different parts of your life, including your health, which is such a great call out to Lisa to really, really be able to say, hey, what we're doing financially impacts our health because it does play such a huge role. I help a lot of clients who are living in retirement, live through retirement, and healthcare is one of the largest expenses they have. So the things we do now to continue to make sure that we're taking care of our health financially, what we have financially impacts that so much. It impacts the food we're able to buy, the physicians we're able to see, the things we're able to do to keep our bodies healthy. So thank you for taking the time today to come and listen. And as we talk today, just know that if there's anything I can help you with in the future, the way I work with clients, I have an established process. It's a 5-step plan that we typically work through where you are today, where you'd like to be, how and can we get you to your goal, how we get you there, and then we work together to stay on track. So just like to put that out there, and then now we'll just hop into what we're actually talking about today. So um, I thought not only with it being tax season, but also this is financial literacy month. So it's a great month for us to be talking about our finances and legacy planning. So, what is the legacy we're leaving behind? Please let me know on the screen. Are you seeing a double screen where it's showing like the next slide, or are you just seeing the one slide?
Next slide.
Okay, so
We
And we
see
let
see
me,
both
them
in the
too.
next slide. Yeah.
I'm going to change the screen it's showing. All right.
Mm-hmm. That's fine.
Nope.
Sometimes it'll do that.
Oh, it's not trying to cooperate where it stopped
That's
showing me.
okay.
That's all right.
Don't
That's
worry
happened to
about
me
it.
more than
What
once.
the next slide will be. I had to, like I said, move my. Now it stopped showing. Give me one. I'll know what I'll do. Share.
Tanisha, be like the preacher. You may try and lose your notes. You better know your sermon.
Oh, I know. You got it. All right. So, are you seeing the screen now that shows the slides? It's showing the
Yes.
next slide. I was trying my other screen. It's duplicating it. It's okay. So I don't get to see my notes. So y'all bear with me as we're going through.
Okay.
But
No worries.
all right. Today we're talking about legacy planning. What does legacy planning really mean? And I do want today to be um, proactive. I want us to be able to be engaged. And so if you have questions, comments, feel free to chime in. If someone raises their hand and I don't see someone, let me know. Someone has a comment. But when we look at legacy planning, when you heard, okay, today we're going to be talking about planning legacy, what does legacy planning mean to you? A couple people mind hopping off mute and tell me what legacy planning looks like to you?
Don't be shy. I know I have an answer. I want my legacy to live better than I did and not have to struggle. So
Ditto.
leave,
Yeah.
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 Mm-hmm.
That was similar to what I was gonna say.
Mm-hmm.
Leaving something good behind
Mm-hmm.
for generations to come.
Yep.
Legacy is what we leave behind. Hopefully it's something good, right?
Mhm.
Yeah.
Everything we do is legacy. When I was in college, we had someone from the American Heart Association come and speak at our school, and it wasn't the nicest, the sweetest way he could have presented it, but he talked about how um, someone there was saying that being overweight was hereditary because every generation of her family had been overweight, and he said your grandmother probably cooked with a lot of unhealthy ingredients, and your mom probably did the same thing, and now you're doing the same thing as well, right? Sometimes our legacy is what we see and patterns and things we've seen in the past. And whether that's, I know I was someone that I didn't grow up with more vegetables on my plate than starch or carbs. And so my legacy was when you cook, we had a lot of carbs, a lot of rice. My family's Jamaican, so we eat a lot of rice with our meals. And that was something I had to learn because that was a legacy I received unintentionally while it tastes so good that I don't necessarily want to pass on, right? So it's the things that we see and do over time that the next generation is going to pick up. So when you look at leaving behind a financial legacy, for you, what does that look like in what you want to leave for the next generation? What does planning a legacy look like? So there's a legacy that's going to be left, but what does planning your legacy look like? So we're talking about that. I want us to be able to think about what we have financially, being intentional, like, okay, what are the assets we have? What are the values we have about money? What have we learned about money? What are principles that are important to you? If you have pen or paper or something by you, you can write something. I would like you to write down one principle about finance that you have that you want to pass down to the next generation or you want to leave as a legacy. Give you a couple
Okay.
seconds for that. Then I want you to write down a principle or a story that you were told about money that came from the generation above you.
Okay.
So as you write these things down, it's something for you to look back and say, okay, these principles that are important to me, how would the next generation know it? Have I already shared it with them? Have they seen me do it? Is it written somewhere? Right? So you have the legacy and you have how is that legacy moving to the next generation? So whether that be a principle, whether that be a story, whether that be monetary assets, what is it and how do we move it to the next generation? That's what reviewing your legacy looks like. So I'll give an anecdotal story. So it's actually quite funny that I'm in finance because I used to be the worst with money. So when people have a hard time saving, I say, don't worry, I got you. I used to be the queen of spending. I said, if money hit my account, it was like a boomerang, it would bounce back out. And as I kind of looked at the legacy and the stories that were told to me that created this in me, I was able to trace back to when I was younger. My mom would sometimes give me an allowance or give me money for different things. And then we'll be out. And I used to save money. I used to love saving money when I was younger. And my mom would ask to borrow. She'd be like, do you have any cash on you? And I'd give it to her. And then she'd forget to give it back to me. And one day she said jokingly, if you just spent your money when you got it, you wouldn't have it for me to borrow and forget to pay you back. And that's what she said to 7-year-old Tanisha, who it was a joke, but became how I lived all the way up until my early 20s. And fortunately, I met someone who changed a lot of those stories for me so that now I'm not spending every dime that hits my account because I'm afraid someone else is going to take it all from me. Right. So the stories we tell sometimes jokingly, the things we share about what we should do with our money, how we should use our money. One of the things I'm breaking out of, I come from generations of women who are entrepreneurs and who hoard money and don't really take care of themselves with it and don't really enjoy life. And that was the cycle I was intentional about trying to break. And so, what are the things that you've seen over generations that you might see in the next generation that you might not even know and you've instilled in them? My mom was a hoarder of money. She would never think she was the one that would make me a spender of money, right? But sometimes there's something that we've communicated that might not be in line with the legacy we want to leave. So make sure we review that. Also, in reviewing your assets and principles and things you want to pass on, who do you want to pass those things to? Reviewing who those beneficiaries are, whether it be children, grandchildren, family members, friends and loved ones, organizations, charities, whatever that body is that you want to leave that legacy for. Do you have a list somewhere of whose legacy you want to and who you want to leave a legacy for? It's great if you have beneficiaries attached to your account. You definitely want to have those going, but sometimes a lot of what we're missing is really saying who do we want to leave a legacy for and making sure we are not missing anyone in that. And also how that legacy passes on to that person. How does that information pass on? How does that asset pass on? We'll talk a little bit more about that. But please know that legacy planning can be very empowering, right? It doesn't matter where you are right now. If the legacy that you're currently leaving isn't what you want to leave, don't feel defeated by where you are. Feel empowered to make the change for it to be what you want it to be. It doesn't matter if you're 10 or 94. I heard we have someone on the call that might be in their 90s. No matter where you are on the spectrum, you still have time to impact the legacy you want to leave and make corrections and adjustments if it's not how you want it to be. So let's talk about how we evaluating and imagining that legacy. Let's analyze what you've done so far. So the first thing you want to do is take stock of whatever you currently have in place for your legacy planning. That could be estate planning documents. Do you have a will? Do you have trust? Do you have beneficiary designations on your accounts? Do you have transfer of death on your accounts? What do your financial arrangements look like? Do you have accounts at 20 different places that your beneficiaries will have to go on a hunt to find? Or do you have a document that lines out where everything is and what your intentions for all of that looks like? How long has it been since you've updated those planning documents? So for my clients, I typically recommend that you are updating your estate documents anytime you have any significant estate changes, like you get married, get a divorce, have children, have grandchildren, have children or grandchildren who got married or got divorced, anyone changing things like that. Your level of assets have significantly changed where you have more property or more assets that you need to make arrangements for. If none of that has happened in 10 years, then your 10-year mark is when you need to make sure you're going over those documents again, making sure you're not missing anything. All right, so if the last time you did your document review was 2016, it's a good time to get with your estate planner and look over those things again. An estate attorney is who you will create your estate plan and documents with. The way I work with my clients and their estate attorney, we'll meet together because I have a line of sight sometimes on estate planning strategy. And we'll talk a little bit about that, but how you line up certain accounts, that's where an advisor can come in. Your estate attorney usually is like, what do you want to do? And as an advisor, I help you come up with maybe what you'd like to do. So if the other thing to look at is career shifts as well. So if you change jobs, you want to make sure old accounts have information. So sometimes I'll see a client left an employer, goes to a new employer. It's been a couple of years. They still had old accounts at the other employer. They got married, updated their beneficiaries with their new employer, but never with their old employer. So you want to make sure you're paying attention to things like that. Look for gaps on outdated records. Look for gaps on outdated planning tools. So planning for estate planning has changed a lot over the last decade. What's available to you now looks different from what's available 10 years ago. Also, estate planning limits have changed. So now you have higher estate deductibles and you might not need some of the things that you had put in place before. But also you might need more things based on what you've been able to acquire asset-wise since that. And make sure, like I said, that you're reviewing it on a regular basis, not just with yourself, but you should have an executor. A lot of times what I see, especially with people in our community, is that we don't want anyone to know what we have. We don't want anyone to know until they receive it in the end. And that is not safe for your beneficiaries, for no one to know what the plan is. It increases issues in probate. It increases family issues as far as people debating who's over what. You should be able to let people know what's coming to them. One of the things I do with a lot of my clients, especially a lot of my clients who don't look like me, is we'll have family planning sessions where people know what's coming to them. Like my clients know what inheritance they should be expecting, maybe not to the dollar, but have a general idea of what may be coming to them in the future. But if you don't feel like you can trust everybody, I know that might not be where we are. You should have at least one person you can trust that's going to be the executor of your estate. So the executor doesn't mean they get everything. The executor is the person who is going to handle your estate on your behalf when you pass. So they get the will. They're the ones to go to the courts and do probate. They're going to get your death certificate and distribute it to all the different institutions that hold your assets, which was a great reason to consider consolidation. Because if you pass and they now have to go to 4 or 5 different banks and 4 or 5 different investment firms to figure out, to drop off documents, that's more time that estate, that executor needs to take to carry out your wishes. Another thing I like to say to consider with your executor, you don't want to say, I'm going to leave everything to my executor and then they distribute it how they want. That gives a high tax burden to them and not the most tax efficient way to distribute your wealth. Also, that will lead to probably more fighting if you're not the ones to say this was what I wanted to do. But one thing to consider is giving your executor a little bit more. So let's say you have 3 children. And or let's make it easy. Let's say you have 2 children and you're saying, I want to leave everything to my 2 kids, and my oldest child is going to be the executor, and my second child is the second beneficiary. And I want to leave everything 50-50 to both of them. Well, the oldest child has to do all the groundwork. So you might say, I might want to leave 55%, or I leave this account with $5,000 to them to cover the expenses, or to cover their time they have to take away from work, or to cover just the extra work they're going to have to do to take care of this for me. That's something you can consider doing. And you outline that in the will. I didn't leave them more because I loved them more. I left them more because they have to do more work. They have to file your taxes when you pass. That takes work, right? Because a lot of times they're going to have to find someone who specializes in estate taxes or filing for a deceased person versus maybe who's been doing your taxes every year, especially if you weren't working with a CPA and you were just working with someone who files taxes just kind of as an annual thing they do to create extra revenue, right? They might not be versed on what to do when it comes to really getting into the weeds of an estate tax return. All right, so I know I just went through a lot before I kind of go on to the next. Any questions, comments?
I really liked, and I put it in the chat, that you spoke to inheritance transparency so that there is no confusion, and I had not thought about how frequently or a timeline of updating things. Others may have, but I liked the significant changes you listed. So thank you.
Thank you. Thank you for that feedback. I appreciate it. Sometimes it's harder doing these in Zoom, so I like to know that what I'm saying is coming across clear. All right, so now let's talk about, you have your legacy, you looked at it, you wrote your list of assets, you wrote your principles that you want to pass on, you want stories that you want told about you. You have that lined up. If something, I like to say, look at your legacy in 3 parts. If you passed away yesterday, what would the experience of your beneficiaries look like today? If that doesn't look the way you want it to look, that's when we start thinking about dreaming, right? So what does it look like today? What changes could you make today so that if you passed in the next year, their experience would be better, or their experience would be how you want it to be? And then if you knew you had another 20 years to build on your legacy, or if you knew you were going to live to age 100, so however many years that is between now and the future, and you could ideally you had time to put the legacy in place that you want, what would you want that to look like? So that addresses 3 things. That addresses how it currently is, what short-term changes you can make and need to make, and then what plans we can have for the future, for long-term planning. So take a moment, and whether you want to just sit in it and think about it for a second, or you want to write some things down. If you knew you were going to live to age 100, what are some things that you would want to leave behind as your legacy financially? And when you're doing this, I don't want you to be limited by what you think you can leave behind, because a lot of times that's what we're limited by, is saying, I think if I had this much time, I could leave this amount behind. Versus, I want you to open your mind. When I used to practice therapy, there was a technique we had where it's like called like no limit brainstorming, right? Meaning if there were no limitations, just write everything that comes to mind. Like would I want to leave my family a legacy where they're able to travel to Mars once a year on vacation, right? Like we can't go to Mars now, right? But I'm not being limited by what's available and possible today. Now, I don't love the idea of going to Mars, so that's not part of what I want to leave, but I let my brain go there and I can cross that off and say no, but I would like them to be able to go to a beach every year because I love the beach. That would be a legacy I would love to leave, right? So really open up your mind and think, if I could leave any amount to my favorite charity or to my church, if I could uh, make sure that when I pass, my church still always got tithes for 100 years going forward from me. Like, don't limit yourself. Really sit and think, what would I want that legacy to look like?
Tanisha,
Yes,
um, what about the blended family?
exactly. So when we talk about how legacy passes, that's one of the things we talk about. When you have a blended family, you want to have what that plan looks like, right? I'll have clients come in and sometimes I'll have spouses that one person's like, well, I want to make sure that the kids I had from my previous marriage get this, and then the kids we have together get this, or when we pass, our kids get things split based on what we had going in. And so I'm like, well, no, I want all the kids to get the same thing. When you have a blended family, you need to have more conversations and you need to have transparent conversations with everybody in the family that's going to impact.
Well, you
Right.
make it tough. Conversations, baby. Hey, the conversation might drive me to the grave.
Right. Right. And that you can write it out first, send it to them for them to read it, and tell them they send you back notes instead of having a verbal conversation. So, I mean, and it's a fair thing to do. I know my mom, because I'm the one in finance, a couple years ago, she had a health scare and she was trying to figure out what she wanted. She was like, I decided what I want to do and I mapped it all out. And we have family business that we're all a part of. So since I was young, my mom's been, um, I've been part of the business, whether I wanted to or not. And I had one sister who did not. She told my mom, no, you can't put anything in my name. I'm not doing any of the business. And for years, I've been a part of the business. And then my mom was like, oh, when I passed, I figured it out. This is all the properties each child's going to get, and you'll all get equal distribution. And I was like, wait, hold on. What do you mean we all get equal distribution? She's never contributed to the business. How come she's going to get the same amount I'm getting? And my mom was like, because that's what I choose to do with my money. And I was like, you're right. You're absolutely right. Didn't like hearing it, but it was the truth, right? And so, and it's better for us to have that conversation now than I find out later and I'm mad at my sister. And so now if I want to say no to my mom about something, I'm like, no, mom, because obviously you're going to give me half anyway. So, but no, have the uncomfortable conversations because it's uncomfortable for you, but it's a lot more uncomfortable for your beneficiaries to be fighting over it. And it can cause wounds that can last for generations to come. And so that's part of your legacy that you leave behind is what it's like to inherit. And so if your children go through a horrible inheritance or your loved ones go through a horrible inheritance experience, that's going to impact what that looks like for them to pass that on to the next generation as well. Okay. So let's talk about some tools and strategies. I see a hand raise. Is that Stacy?
Yeah, so I really have more of a comment. I agree with what you just said. When my dad was planning his will and everything, he left me as the executor of his estate. I had three siblings, and he left everything equally, like the house, equally divided for between all of us. And my brother had a conversation with him and said, "You know what, Dad? I don't think that's a good idea. I think you need to leave the house to one person, and it should be Stacy, because if not, she's going to have to work with all of us before anything gets done with the house. She's going to have to coordinate, and that's not fair to her. So I think maybe, we need to think of a different way on how we're going to do this, because, you know, that's going to be a lot for her to have to take over, and she's going to have to get agreement from everyone before she does anything. So that's one thing to think about as well."
Yes, having those plans, absolutely. That's a great example. Having those conversations, and you'll be surprised sometimes that some of your beneficiaries are willing to give up certain things because they don't want the hassle of it as well. And I had a client where they were in the situation where they had a parent who left a lake house to all three of them equally. Similar situation to you, but they didn't have that conversation before, and two kids wanted to sell the house and one wanted to keep it. And he asked his siblings, "Can I buy you out over time so I can, for tax strategy purpose?" And the siblings said, "No, if you want it, you got to buy it from us this year." And he is so upset with his siblings, but at the same time, they wanted their inheritance. They had plans, they had things they needed, and a strategy in place before that could have prevented that. Right? So one of the things that I talk about when we talk about estate planning is when you look at your legacy, who you're leaving everything to. Equal distribution does not always equal equality, right? We know this. Equity and equality aren't the same thing. So let's say you have two children. One is doing very well financially, has a high earning job that they are in a high tax bracket because they make good money. They're making over $200,000 a year. And then you have another child who may be making $50,000 a year. And now you have two accounts. You have an IRA account that has tax deferred money, and you have an investment account that's invested in stocks, mutual funds, that's grown over time. So who can tell me, or who knows how money in each of those accounts would pass? Like, how does, if your inheritors got a traditional IRA that had $1 million in it, and there's two of them, and your two children, and it's $1 million account, they're going to get $500,000 each. When they take that money out, what does their experience look like receiving that money from a tax standpoint?
I
Does
believe
anybody?
there are a certain number of years that they have to take it out. They can't just take it out when they want to necessarily. There are requirements as to how much they need to take out. And I think it's like 10 years or something for tax deferred accounts. If
I
it's not
see
your
CPA
spouse.
in your title, so say yes, yes.
Plus, aren't the tax laws changing somewhat now? With the
They
changes
should.
in the tax laws, it's going to be according to when you're actually getting involved with taking these monies out. And based on what I'm hearing so far, it sounds like that pre-planning and discussion with family prior to the loved one's demise is the better way to go.
Yeah, so tax laws are constantly changing.
Okay.
I like to say we plan for what the current laws are, and then we make adjustments as they change, because a lot of times it's hard to plan based on hypotheticals of what's coming. But currently, if you have two children who are beneficiaries to your IRA, they will have 10 years to remove the assets from the account, depending on when you pass. So if you are already in the stage where you're required to take required minimum distributions, they'll have a required amount they need to take out each year. If you weren't in that stage and they're not in that stage, then they'll have 10 years to distribute the account. So if that's $500,000, and they decide to take it out over 10 years, they could do as much as they want each year. But let's say they but equally 50,000 a year for 10 years, to get all 500,000 out. When they take that money out, they pay taxes on it. It's in an IRA. IRA money never avoids taxes. The IRS is going to get their tax money. So that means if you have two children, one that makes 200,000 and one that makes 50,000, and now you leave them both 500,000 each from the IRA, who actually gets more money?
Probably
The one-
50,000.
The child who only makes
The lower-
50,000 a year,
Yeah.
because they have a lower tax
That's
requirement. Your other child now has to figure out tax strategy. When should they take that money out? They have to now look at being in a higher tax bracket based on this inheritance, which we can easily say you still got money that you didn't earn. But that we can also say, let's find a better way. So now let's say you have another situation where you have a taxable account that you have bought stock in for years, and now that stock's appreciated in value. So let's say you put $100,000 in that account, and now it's 500,000, and 400,000 of that is growth, but it was in a non-IRA account. Do we know what happens to those? So let's say first, if you were to sell that stock, that $100,000 stock, and now it's 500,000, if you were to sell it today while you are alive, what would your tax implications be? Does anyone know?
Capital gains tax.
Capital gains. You pay capital gains on that 400,000. Now, let's say you passed away and your beneficiaries inherited that account. What type of taxes do they pay on that 400,000?
Repeat the
Zero.
question. Repeat the question.
So if you now pass away, and now after you pass away, your children inherit that stock, how much do they own in capital gains?
Nothing.
Nothing. We get what's called a step up in basis. So when you pass away, your children or your beneficiaries' cost basis is now 500,000. Why is it important to understand how the taxes are treated differently? Because now you can work with a professional like myself and come up with strategy and say, I want to make sure at the end of the day, both of my children get similar amounts of money after tax. So now we can say, let's leave more of the taxable money to your child in the higher tax bracket and more of your IRA money to your child in the lower tax bracket. And then we come up with the ratios. So now when they inherit it, this person gets more of this account and this person gets more of this account. Or this child wants to keep the house, but this child doesn't want the house. So now we're going to leave this account to the child who's keeping the house to help upkeep the house. But this other account, we're going to leave to the other child. And now we're going to come up with a strategy. Splitting everything equally is not the only way to leave things for your beneficiary. And so you want to take the time to really plan out what that looks like. And those types of strategies, I mean, we could go on for days and days and days talking about it. How do I know? Because I had to go to all the classes to learn it. So that's not something we're going to find out in our session tonight. But I want you to know there's different ways. So you want to map out a strategy based on what beneficiaries are getting what. You also include charities and organizations into that strategy. How money moves to different organizations impact tax strategy as well. So that's something to keep in mind as well.
I have a question.
Mm-hmm.
The
Yes.
example you just gave was if you own some stock and it goes off to pass it on to your children. What if you own stock jointly with your children? Does that have a different implication?
It does. And how you title that matters. So when you pass, if the way it's titled is going to impact if they get a step up in basis or not. So you want to make sure wherever you own stock, if it's jointly, that you're properly titling it. And the reason I'm not just telling you how to title it, because the state you're in and who the other person is that you own that with, whether that's your spouse or your children, makes a difference. So that is definitely something you want to go over with your state attorney and or your financial professionals that you're working with. Now, I'm mindful of the time, and I'm mindful I'm supposed to be wrapping up. There's one thing I want to make sure we touch on that we haven't specifically talked about, and that's how you leave a legacy with life insurance. Especially in our community, that is one of the top ways that we pass money on to the next generation is in life insurance. And I want to bring it up in two ways. I want to bring it up in the way of this can be a great way to pass legacy on to the next generation. But also, this can be a dangerous way if we don't understand the type of policies we're getting into. So, talking about life insurance and all the different ways we can use life insurance is something we can have another session on. But what I want to talk to is that please make sure if you have life insurance, you're reviewing it on a regular basis to make sure you know when that policy will lapse. Not all permanent policies are permanent, meaning if they're not properly paid for and funded, they can lapse. And term policy can be great. Just make sure it lines up with the term of time you need. And then make sure that the professionals that you work with to get life insurance understand what options they have available to them. What do I mean by that? I worked previously for another firm that I sold life insurance. And I had certain life insurance policies I was able to sell. And guess what were the best policies to have? The ones I was able to sell. Now I'm able to sell more policies. And now I see the benefits of more policies. So the clients I worked with 10 years ago, I wasn't trying to scam them. I didn't not want them to have the best things for them. It's just the companies I worked for said this was the best thing and this is why people should have them. And now when you have access to more tools, you're going to be able to present more options for people, right? If all I have in my toolbox is a butter knife and you need to remove a screw, I'm going to present you a butter knife and it's going to get the screw out, but it's not the best way. But if I have power tools and I have screwdrivers and I have a butter knife, depending on the type of screw, what you're trying to accomplish when you pull that screw out, I now have different options for you. And I want to put that out there because in our community, the number one question I get is index life insurance. And do you know why index life insurance is so popular right now? Because you don't need an investment license to sell it. And so people who don't fully understand investments are selling you an investment strategy. So my caveat, I just want to make sure we're aware. And if you sell it, please don't take it offensively because that is not, I hope it's not taken in offense because they can be great tools, but just make sure you're aware to make sure that is the right tool for you. So with that, I want to hand it back over to Miss Lisa. I tried to wrap it up as quickly as I can, so thank you.
This was excellent. I mean, the detail that you provided for us, the strategies that you've given us, I'm sure that you've made most of us think and think about what we have and how we might do some things differently. How we are funding accounts, what type of accounts we have. And like you already said, it's never too late. I'm going to take that thing with me that says, what am I doing? What's current, what's short term, and what's long term? There are opportunities for us to think about things right now. So Tanisha, you've given us a lot to think about in building our legacy. I'm going to stop. If there are questions, please come off, ask your questions. If you want more, we can bring Tanisha back have her talk about this some more. And if you want to reach out to her, her information will be sent out. It's already in there. You've already got where she is in the original one, but we'll make sure. Are there any questions?
Yes, I have a question, and this is Walter Spain. I've heard a lot of conflicting information about the irrevocable trust and the regular trust as far as what you should move your property and valuables in.
Mhm. Yes, so trust, that's a whole another conversation too. The thing to know is we have so many different options because the answer is the best one to use is it depends. It depends on what you're trying to accomplish with the trust. I will say that the need for irrevocable trust have reduced significantly since the estate tax limit has increased. So before, when the estate tax limit was 5 million, there was more reason for irrevocable trust to be able to reduce your estate tax purpose needs. Now, with it being over 11 million, we find less reasons why people need it. So that's one thing. A second thing I'd say, a lot of times that's where someone asked about blended families. Irrevocable trust can be very helpful when you're dealing with blended families because that guarantees that your beneficiaries receive certain things and that even if you go through a divorce or something like that, the assets that you went in are protected for your children. But when it comes to trust, just like you want to make sure when it comes to life insurance, you're talking to someone who has all the tools. You want to make sure you're talking to an estate attorney who understands different types of trust and understands trust that you may need. So what I mean is there are special needs attorneys who specifically work with people who have children who are special needs. So when I have a client who has special needs children, I refer them to an estate attorney who works with families of special needs. If you're a business owner, then you want to work with an attorney who works with business owners because then they understand how business owners need to have things set up to protect the business and protect their legacy, right? If you have a blended family, you want to make sure you work with people who understand that. If all your assets are if you don't own a home and all your money is in bank accounts and investment accounts, you might not need a trust at all. So you want to work with someone who understands where you are and what your needs look like.
Did that cover it, Walter?
Yes, thank you.
You're welcome.
Okay.
Tanisha, you did an excellent job.
Thank you. I appreciate that. I love doing this. I love having an opportunity to speak and share. There's so much that we don't learn. And one of my favorite scriptures that I live my life based on that opened my eyes at a young age was, my people perish for lack of knowledge. It's not because we don't go to church enough. It's not because we don't give enough. It's because we don't know enough. And so that's why I have all these letters behind my name. I want to learn as much as I can and educate people as much as I can. So I thank you for the opportunity to be able to do that today. I do work with clients in all 50 states. So if there's any further questions you have, like Ms. Lisa shared, you will be able to contact me. But just know, just to be able to share the education, I'm happy to do this at any time. And I thank you for the opportunity.
Thank you. It was wonderful to have you, Tanisha. And we've got a resource that I think everybody on this call has enjoyed and appreciated the way that you presented it. So thank you very much for taking and spending the time with us. And yes, I will have you back, and people may have specific topics they want to talk about. So we'll learn from the group if there are other things they want to learn. Anybody, any final questions?
Just want to know if Tanisha ever been to Mississippi, because I might get her down there for a Ladies' Day program to speak to the ladies.
Oh, I
Oh.
haven't been out to Mississippi before.
Yeah.
I would just like to say excellent job. Tanisha, for the short period of time to present so much. Each one of those areas could be a 45-minute presentation, but it definitely lets us know that even if we think we have it all together, we still may not, because there are things change, laws change. One interesting thing I find interesting is how much, when you talked about how much you share early on and when you share that. That's something that we all should think about, because you don't want to necessarily cause friction when something happens. But on the other hand, if you share too much, people may make some wrong decisions on what they do, waiting
Yeah.
for their inheritance.
Mm,
So that's an interesting
yeah,
subject. You could spend 45 minutes on a lot of these areas, and especially Walter's question on the different
on the
types of
trust.
trusts, revocable and
Mhm.
irrevocable, because all that comes into play as far as, protecting your assets if you have to
Yeah.
go to a nursing home and all those kinds of things. So each of those areas, but you did an excellent job to cover so much in 45 minutes. Fantastic. Thank you.
Thank you so much. I really appreciate that. Thank you.
And Tanisha, if any member on this call would like to reach out to you by phone, may I share their phone number with your phone number with them?
The office number, please. And just
Okay.
that's the 972. Just because with my cell phone, I am not an organized person. So you message
Okay.
me or text me on my personal, and also I'm not allowed to discuss business on my personal phone as well. But yeah, so
Okay.
my
So
website,
972.
I'll drop it in the chat for everyone.
Okay. Okay. All right. Just so we have it before we leave. And the website is actually in the invitation, I think, for Edward Jones. So, but we will do that. Okay. All right, there it is. 972-208-5688. 972-208-5688. Again, I say thank you and have a good evening, everyone. Tanisha, be safe. Thank you for joining us as you hunkered down waiting on tornadoes. So thank you.
Thank you
Mm.
so much. I appreciate you all.
Thank you.
Lisa,
Okay.
just wait up.
All
Get
right.
a break
Take
with
care,
it.
everybody.
Thank you. I appreciate it.
Okay. Y'all have a good night. Okay.
Okay, you too.
Thank you, Lisa.
Oh, thank you. I just stopped the recording, so this is good.